Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today we're going to recap the RBA's interest rate decision. We're going to talk a little bit about Bitcoin, Russia, Ukraine back in the news with an interesting sort of dust-up and engagement between President Donald Trump and the President of Ukraine, Zelensky. A lot going on here. We're into holiday trade. There's no two ways about it. We are talking about markets that aren't doing anything. If you're trying to play breakouts in the U.S. indices, if you're playing the orb strategy, the opening range breakout, if you're trying to play trends, I highly advise against any of that right now. You're just not seeing the action. This is holiday trading. Now, we're going to get some activity. We're going to get some volatility tomorrow on the Fed interest rate decision. We're going to get that going. Next week, we're going to have NFP and CPI. Those events are going to be about it. And what I mean by that is you're just not seeing the action across the stock market right now. Stocks have just absolutely, the volumes are down. Participation is down. People are definitely today, they're in a holding pattern ahead of tomorrow's Fed meeting. But after that, you're going to see most of the institutional investors are going to DD. They're going to take off for the vacations. And I think that is something that you need to understand. Commodities are still relatively active. Silver is banging above 60. Are we going to see an intermediate term top there? Maybe. Crypto, we're seeing some action in crypto. And then also natural gas. It seems like every day we see a big time movement in the natural gas market. And a lot of that's because of the Russia-Ukraine situation. WTI crude oil, again, we're off about 1.25%. That's a big mover. So if I'm trading and I'm an active trader and I'm looking at getting something accomplished, I am pulling way back from stock futures and CFDs. Right now I'm saying, I haven't seen the action there. It is choppy every single day. We're not getting the moves that we're accustomed to. Those daily ranges are small, and I think that that's absolutely imperative that you understand that. Know what you need to get accomplished. Trade the markets that are going to help you accomplish those goals. This is very slow, and I'm just going to shoot you straight. You know, I've said in the past, people lose a majority of their money fighting strong trends. That's one way. The other way is that people lose the rest of their money trying to shoot for profit targets that aren't there. And when you're in a market that is moving sideways, that's rotational, that's range bound, and you're trying to shoot for these 1 to 3s, 1 to 4s, 1 to 5s, and you sit around scratching your head going, man, I haven't got a move in forever. Well, that's because the markets aren't moving. That's one of the biggest lessons I could ever pass on to anybody. Markets do not have to move. Markets don't have to move. You've got to have a catalyst. You've got to have a conduit. Something has to bring participation to the market. And right now, you don't see it. People are scared of tomorrow's meeting. I've already seen it's all going to be a hawkish rate cut. We're going to see rate cut, but it's going to be hawkish. We're going to see an ultra dovish reaction. We don't know what the heck's going to happen tomorrow. It's all going to be about the FOMC press conference. I'm going to have that live for you starting about 10 minutes before the presser begins. So you've got to really understand that we're in a situation right now that is very difficult to win. And I really want everybody to understand that you can get crushed this month. You can get crushed this month and sit around and throw your strategy out, throw your mentality out. All your goals are out the window because, I had a tough December. Well, most people have a tough December. Hey, listen, I mean, just like it's Tuesday, Wednesday, Thursday, it is time to trade and be active. Well, there's also months in the year. February, March, April, May, great trading months. 4 of them right there. September, October, most of November. That's another 3. That's 7 months that are very good. Summertime, last summer was pretty good. Can be challenging. Holiday season, December trade can be very challenging. So as much as I hate to tell everybody just to sort of hold their water and wait, another few weeks before we get into some great trading, if you're going to trade with reduced leverage. Do not max yourself out. You don't want to lose a bunch of money in December when the new trading year is right around the corner. I want to start with that because I'm getting really tired of looking at my tote board going, nothing's happening in stocks. I mean, we're trying to put up trade ideas and things, but there just isn't any movement. And when there's no movement, we try to force trades. All we can really do is look at our key levels, have game plans ready to go, and then execute if the market comes our way. That's why a lot of folks, they just kick off for December. They say, well, see you next year type of a thing. In any case, we'll be here for the next few weeks anyways, in any way, I don't know, in any juncture. We'll be here for the next several weeks. All right, T. Marina, good to see you. T. Silver was on a ride. Silver broke above 60. We're going to talk silver. That's interesting. Bible Tales for Kids. Bobby Bob, good to see you. Bobby, welcome. Andrea Garwal, always a pleasure. Andrea Alita, good to see you. Alita, welcome. If you guys have any questions or markers, Tuku, definitely reach out. Any market you want to look at, any question you want to ask me, I don't care if it's about the markets or not. You can ask me anything you like. I will do my best to answer, and I'm probably not going to BS you. I'm going to shoot you straight. But definitely there's a few markets to talk about, but there's not a lot to talk about. So we're going to try to do our best to give you a good live stream that's thought-provoking and gives you a few ideas, at least moving forward into tomorrow's trade. All right, bring your ambition into focus over at Switch Markets if you want to capitalize on the markets, or maybe just look for some bonus money, or maybe top-notch fills, free access to our algo builder framework, and also Pine Connector, all those different things. All our tools are all right there for you. Just head on over to resources, and they've got pretty much everything you need. That is going to be getting a lot bigger as we move forward, so be sure to check out Switch Markets if you're interested in getting off on the right foot in the new trading year. And that's going to be 2026, and it's coming. It's about 3.5 weeks away. All right, let's get on into price action here. I want to get everybody up to date on Bitcoin. Last week, I think we had a pretty good call in Bitcoin. I really do. Big fan of Fibonacci retracements. There's your monthly chart, sort of your swing low from back April all the way up to your yearly high, your all-time high in October. There's the pullback, 78%. We were essentially bidders from 85.5. I don't know if you remember that stream, but that was, what was it, last week? We were looking at that level saying if this level holds, we could definitely get rotation higher, and that's exactly what happened. We saw bidders really dig in. Nice big washout down to 80. The trade idea itself was about 85.5-ish. Stop loss was beneath 80, and we were looking for a nice payoff there, and we got it, and it really wasn't much of a problem. Really a nice bounce off of 78%. Now, the biggest thing to remember about a 78% retracement level, it is the line in the sand. It's the point of no return. If 78% doesn't hold, then we're going to go and we're going to mop that swing low, which would be the yearly low, down around 74. Big time zone. It's held up scrutiny right now. I'm still watching for a return to 100,000. You can also almost see the 62% acting as topside resistance now. So price sort of rotating between 94,250 and 95.5. I think it's a fascinating market dynamic as we roll into into midweek trade, late year trade. What happens to Bitcoin from here on in? I think you're going to see this market base, then rally. I'm looking for a close this year above 100,000. I don't know that we'll get it, but I think we're at least going to test on 100,000. I think it happens in the coming days as well. So you definitely want to dig in there. If you're a Bitcoin trader, if you're a crypto trader, it looks like the bulls may be making an intermediate term stand there. This was the one that I really loved, though. I loved Ethereum. I thought that Ethereum had a real chance to tank. That's one of the reasons why, I don't know, they don't have the final leaderboard up in that TradingView contest, but one of the reasons why I didn't win is because I said, listen, we had a real good opportunity here. Fibonacci retracement on Ether, spike low, spike high. There was your pullback, big time level right there at 27.50. Then immediately I said, well, if I'm going to win this contest, I got to take a shot. And my shot was going to go, I went short from right there, sort of banking that we're going to break beneath last month's low and extend down to about 2,122. Didn't develop. We got a beautiful bounce. This essentially is a Fibonacci retracement working beautifully. Initial test was stiff. Your last month's low was down there about 26.21, bounced up $100, and since then, what are we up about $500, $600? That was a great trade. Those levels held firm. Really nice position stuff when you're looking at the ability to trade crypto. I love trading crypto on the cash markets because it gives you what? It gives you staying power. It gives you the ability to buy something and hold it, a lot like a stock. We're not leveraged out in the cash markets, so we have staying power. We're not going to get eliminated, and it's not going to happen fast because we took too large of a position. That's good stuff. That's a nice move. I mean, just pull out my little calculator here. 3370. So let's say we just go to 3,300. 3,300 and the bid was 2744. So 3,300 minus, let's say, 2750-ish. You're down to about 550 divided by what? 2750, 550 divided by 27 is what? About 30%, something like that. Not that high. Excuse me, I take that back. 27, it's about 20%. So I was in the ballpark. That's a hell of a trade. Very nice stuff. I'm out of crypto. So our bullish bias are still very warranted here. I think that we're in for some pretty good trading with crypto. Unless I see something really big in the news headlines, I'm very bullish crypto for 2026. We may be a year late, but I don't think so. It looks to me like you're going to get some rate cuts. You're going to get some deregulation. You've got an administration in the White House that is very, very pro-crypto. And as long as you have institutional adoption, deregulation, and enough cheap money in the market to make folks invest in crypto and in crypto blockchain structure, blockchain technologies, you're going to see this market rally. There's no question. Is it a good investment from here? We might get a better price if we're patient. We might not, though. And those key levels on the monthly that held up, 62% for Ether, the yearly range, 78% for Bitcoin on the yearly range. That is great news for Bitcoin bulls, great news for Ether bulls, great news for crypto bulls. All right, let me see. Everyday prayers. I'm paying for premium in a few minutes. Okay, paying for premium in a few minutes. I don't know what premium is. Sorry. We don't have a premium service here. You tune in, catch these live streams for free every day on Switch Markets on YouTube. If you're interested in potentially interacting with me directly, you can head on over to howtotrade.com, join there for free, and then send me a private message, and you'll be up and running with any question you want, and we can answer it in private. So there's a lot going on there. T. Marina, Shane, can you give me a quick rundown on the importance of the JOLTS job openings? Read my mind, T. You read my mind. Absolutely. We've got two fundamentals to cover today. We're going to talk JOLTS job openings, and then we're also going to talk the RBA interest rate decision. So let's go ahead and let's just dive into our fundamentals here. Very quickly, I did a write-up on the JOLTS job openings. Great Britain pound, a USD resistance level in view, right out to price action. The JOLTS jobs came out earlier today. I'm going to recap those for you in a second, T, and answer all your questions on them. Nice big move here, about a 2-3 month little sell-off, nice rebound in the third of the three. But what this is right here is just rotation. I'm loving 62%, the back end of that, right around 134.52. And I believe our trade idea was somewhere right around 134.44. Check out our key levels there. And you can see that I would outline that because, number one, slow trading day. I mean, the Great Britain pound USD is, pretty much flat. It's off. Minus 0.19%. Good luck with that. But what we can do is really game plan what we're going to do for tomorrow's Fed meeting. Tomorrow's Fed meeting is the big event this week. 134.52, 134.40. I love that area as topside resistance. We're in there for a scalp looking for probably 50 pips, something like that. Maybe 25 if we're ultra conservative. So I did want to get that trade update out there before we hit our fundies. All right, week 50. We've only got a few trading weeks left in the trading year, and that's a good thing. It's time to turn the page. Time to look at what we've done well, what we've done wrong, and how we can make 2026 a banger of a year. So definitely good time for self-inventory, wrapping up the trading year. Can't wait to get 26 up and going, though. Start fresh. It's a new, everybody's born again. Start fresh. And I plan on starting fresh. My money goes into my accounts, and then we start building. Now, it's going to be a little bit different than the money that was in last year, but the idea is the same. Build an account over the year. I'm going to talk about that psychology of how to develop your own long-term approach to these markets. Always remember, just because we're short-term traders doesn't mean we don't think long-term, and we're going to go over that as we roll into the new year. All right, so Tuesday was the RBA interest rate decision. That was the big one in the JOLTS job openings. Tomorrow, BOC interest rate, EIA stocks, Fed announcements. Fed announcements, the biggest one, BOC interest rate decision. Ought to be interesting. That's early in the session, so be watching your Canadian dollar and your U.S. dollar. Thursday, SNB. Going to be watching the Swissy there. We're going to talk a little bit about the SNB tomorrow. Get you primed and ready for that big event. Initial jobless claims as well. A little bit of action going to be there. Probably not much. And Friday is sort of a no-donation Friday. UK GDP, Germany CPI. Probably not going to move the markets much with either of those events. All right, news of the day. The RBA interest rate decision came in at 3.60%. and that's unchanged. So what are we seeing out of the Asia-Pacific theater? What are we seeing? We're seeing a little bit of a hawkish tone. We're seeing the Bank of Japan raise interest rates, or say they're going to raise interest rates. And now you've got the Reserve Bank of Australia holding interest rates at current levels. It's fairly hawkish, especially when the rest of the world is still dovish. Is the United States the last dove to the party? Is everybody already completing their cycle and then maybe thinking about holding firm or raising? This is fascinating stuff. This is fascinating stuff. I'm interested, but in any case, 3.60% is what the RBA did. You'll notice our trade update here. Still haven't got in on it. We've got a little sell going right in front of 2025's high, and you'll see on our 920 EMA crossover, a 4-hour chart. That was a daily bullish buy there, but you actually had a 4-hour bullish buy when the 9 crossed over the 20, and it was right back there, and it was a beautiful thing back on the 25th of November. Really got you into some beautiful trading there. I'm looking at 2025's high as being a potential area of resistance, area of two-way action. And what that means is we're looking for a little bit of compression right here, and then more than likely a nice little short scalp. So if you're interested in that, check out that trade ID. I believe the entry was somewhere right around 66.94-ish, 66.90, somewhere in that vicinity. And remember, if you're over at How to Trade and you follow me, click on my picture, follow me. You get these trade ideas sent out to you directly to your email. Essentially, that's what we're looking at there for a nice little counter trend scalp. I think that could be a very, very good one. It's one that I'm watching closely, and we're not that far away from it. We're about, 50 pips. I fully expect to get a shot at that potentially tomorrow, especially if the Fed comes off as being a little bit dovish. Interesting stuff there. Okay, we had a question on the JOLTS job openings. This really was the news of the day here in the United States. Now, the funny thing about the JOLTS job openings is that it comes out during the U.S. session. So it comes out at about 10 a.m. Eastern, which is about 30 minutes after the U.S. Open, that cash open. So the JOLTS job openings is interesting as it can bring you some very short-term volatility. It did not do anything to sway market sentiment today. It just didn't. So let's go ahead and take a look at it. So I'm going to start with the numbers, and I'm going to tell you what the JOLTS job numbers really mean and what they are. But let's start with the statistics. JOLTS job openings, 7.658 million. That's above 7.2 million. Expected in 7.227 million previous. I don't care about the leading index. JOLTS job openings for October, 7.60 million, and that was a little bit better than the previous release. So what are these numbers? What is a JOLTS job opening? JOLTS jobs, a little bit different than new jobs created. So when we do like an NFP or we do initial jobless claims or something like that, we're looking at maybe measuring the people that go to the unemployment line for initial jobless claims, unemployment rate, see if that's rising. NFP is the number of new jobs created. What's a JOLTS job opening? Well, it's done by the BLS, the U.S. Bureau of Labor Statistics, so it is an official metric. It measures job vacancies. Now, in order for this to be a job vacancy, it's got to meet some criteria. A specific position exists and there is work available. Okay, so that's basically an empty job. So let's say if the local bank was hiring a finance manager and they didn't have anybody in that position, that's a vacancy. All right, the job could start within 30 days whether or not the established finds a suitable candidate. So it's available for immediate fill. So that job is going to be one that's open, that they're willing to hire and get somebody up and going immediately on it. Number 3, there's active recruiting for workers outside the establishment. That means that the establishment is outside the recruiting. They're trying to fill the position. So the biggest thing to remember about JOLTS jobs is that it's an opening. It means that, yeah, there is some growth in your economic sector. What would a bunch of job openings mean? It can be perceived a number of different ways. You could say, well, everybody quit and they can't find anybody to fill the position. You could say that. After COVID, or during the COVID era, that's pretty much JOLTS. We're like, we don't know what that means. Now, when you have unemployment rising up above 4%, and you're not nearly at maximum employment yet, you aren't in a situation where there's just a ton of jobs out there. So when you see an increase in your JOLTS job openings, typically that's viewed as economic expansion. That's viewed as economic growth. Companies are expanding. Now, I don't know that I believe that. Everything that I hear on the street is downsizing. I've talked to a lot of people, not a lot of people, but several people that have been downsized, and they were giving me the ins and outs of it. And I was very surprised at what exactly was happening. Now, a lot of this is because of AI. You've seen a lot of corporate layoffs in the last 6 months, and a lot of it is because of AI, no question about it. So what is a JOLTS job opening right now? If a JOLTS job opening comes in higher than expected, we sort of figure that, okay, there is some expansion. We're just not really sure in which sectors, and we're going to look at that in just a second. But that essentially is what it is. So what was the official number here? Here it is right from the BLS. Job openings in the United States increased 12,000. I can't read today. Job openings in the United States increased by 12,000 to 7.6 million in October, up from 7.65 million in September, according to delayed data from the U.S. Bureau of Labor Statistics. We are still delayed from the U.S. government shutdown. Still. It's ridiculous what happened. It messed up all of our analysis. I mean, people don't know what's going on in the jobs market right now. They're waiting for next week, the 16th of December, when we get the next NFP report. That's going to be a huge figure. We'll talk more about that when the time comes. All right. So we got a big jump there. What is the sector? By sector, openings rose in trade, transportation, and utilities, led by retail, and wholesale trade. I don't need to go any further than that. So what does an uptick in retail and wholesale trade mean? Holiday season. More than likely, a lot of those positions are going to be seasonal. So you could see logistics. I don't see anything specifically in logistics there. They're probably lumping logistics in with retail, which would mean what? New UPS drivers, seasonal for the holiday seasons, UPS drivers, FedEx drivers, DHL, things like that. So those are going to be some of those jobs. Maybe some of those are also in the logistics, sorting packages, things like that. Drivers, you guys get what I'm saying. Also in the retail sector, a lot of stores, and granted, brick and mortar stores and shopping malls are about finished because of the online, the online business plan, but probably hiring more people to man these websites. Maybe they need more people working on servers. Maybe they need more server space, and that employs people to run the servers. Who knows? God only knows. All we know is this. More than likely, that uptick is seasonal. So I'm pointing my finger and I'm calling BS on those JOLTS job numbers, but it is an interesting type of a data set, and it's one that can move the markets. It just really doesn't. As far as this is your last year, November, you can see how much higher they were last year than December. And then right here, you sort of 2025 has been really tough for job openings. A lot of reasons for that. We could talk tariffs. We could talk AI. This is the interesting trend, though. 2022, right? Way up here. And then we're just been on a steady decline. Maybe we could say that that's the onset of AI really impacting society and wrecking the jobs market. We might be able to get away with saying something like that. I mean, I could make that argument, that's for sure. The real question is what's the long-term implications of all this? Is it fewer jobs? Is it less openings? Because if it's less openings over time, it means that your unemployment rate is going to go up, and this economy is going to get very, very tight. So the job creation has to come from somewhere. And if you have AI taking a lot of I would say the intellectual property game's got to be finished. Content creators, all of them, they got to be finished. We're really starting to wind down because AI is taking over everything in that space. Believe me, I worked for a writer for 10 years. I was not 10 years, but 6 years. I was a full-time writer, and that's what I did. I wrote for financial media, and the big thing that I was talking to some of my old contacts in that arena, the layoffs are staggering. They're staggering. And it's because AI writes everything now. They really do. So except for my daily trade ideas, I write those. Those aren't AI produced. Maybe 1 out of every 50. If I don't have time, I'll get on the ChatGPT and have it craft something, but I still have to edit it and put it out there. So, but those trade ideas are those are man-made. Those are man-made, that's for sure. So Team Marina, the importance is it just isn't what you think it is. It's an employment metric. It's from the BLS. So right now we're starved for employment numbers. It should have a little bit of added importance, and it just flat doesn't. It just doesn't. And the reason why is everybody's waiting for the 16th of December in NFP. We're going to get really an unprecedented NFP report. It's going to be one of those that nobody's going to know what to make of it. We're going to look really hard at the unemployment rate. That's going to be the biggest takeaway for me, just because it's going to be an aggregation of 2 NFPs or 3 NFPs. They're going to dump this huge amount of data on us, and we're really not going to know what to do with it. I think the markets are going to be irrational around this release. I'll have it for you live. But they're going to be irrational because nobody's going to know what the heck they mean. Well, okay, the numbers come in. Is that good? Is that bad? What should we expect? What don't we expect? The unemployment rate is going to be the key tell. That's what we're going to be watching. I've got my eyes fixated on 4.5% unemployment. If we get up to that level, that range, 4.5%, 4.4, there's trouble in paradise. And that's going to really set the stage for aggressive rate cuts throughout 2026 with the new Fed. The problem is where does all that cheap money go? Does it go into job creation? Does it go into building factories and getting people back to work? Or does it go into data centers and in AI and server space and all that? One creates jobs, one doesn't. So, I mean, I'm laughing because I see so many questions and so many problems on the economic horizon here in the United States, but I can build a case that the stock market's going to keep going up. I can build that case. That's for sure. Let me see Akin. Good to see you, Akin. Welcome. I want to know how Forex signals works. Well, we don't do signals anymore. I give you a trade idea pretty much every day, and I go over any markets that you would like to look at on these live streams. I'm going to go over some markets right now, but there is no signal. I would never tell you what to trade and how to trade it. That's sort of up to you. I try to answer questions and give support wherever I can, and that really is the key. Really the key to these live streams. It's designed to be an interactive trading experience, which means you can interact with me and I can interact with you. If you have any questions, I'll do my best to answer. And then I'll also show you some of my trade ideas and things that I'm looking at for my trading days. All right, let's get out to silver. That really is the story today. Silver is absolutely banging higher up to about 60. We've taken 60 out. We've had these key levels outlined for seemingly ever. Let's go ahead and let's go. That all-time high was one that we were looking at. We knew that we were going to wash that out. Once we did, the previous month's high right there, previous week's high, once we wiped that out, we had a pretty good idea that we were going to 60. So let's go ahead and just fixate our study around 60 and see exactly what's happening there in the short term. Let's take this down to a 1-minute chart. What's happened? There's your initial approach to 60 right there. Came this morning at 8:42 a.m. my time. This is great stuff, guys. This is why key level scalping is probably one of the most powerful things that you could ever be a part of. You see this stuff over and over and over again. There it is. What's the hard strike? 60.007. Pull back. Fantastic. What's the low there? 59.78. It's a tight scalp, but it's there. What happens? You hit 60 there. What is that high? 59.997. Boom. Pushed a little bit higher, and then bang, big sellers come in, sellers, and then we break. And then once we break, it's relatively easy. Is that 60 now resistance, or is it support? It's support. So if I was looking at an intraday trade on silver, it would be relatively easy. I would go right here. I'd say, okay, 30-minute chart, what do we have? Let's get rid of 60 off of there. What do we have? What do you got? A low right there, 6:30 a.m. my time. That's 8:30 a.m. Eastern. That's during the U.S. pre-market. Spike low there, spike high. Bit of a pullback. 59.79 will be 38%. The trade probably is going to set up to be something like this. Probably push a little bit higher, maybe up to 60.93. Right now we're at 60.40. Definitely a trend day up, no question. And right there would be your bid. So you're looking for the convergence of a Fibonacci level potentially. In a reason to buy the 60 area. Right at this point, you would be buying that as short-term support and trying to play a bullish scalp off of that key level. That's absolutely huge because if you do get that pullback to that two-way area. Now remember, everybody's got an opinion on silver from 60. Is it overpriced? Is it underpriced? Right now I can build a case that that's a great support zone because we're trending higher. We can do that. We can get away with that. But in order to make this trade a really good one, you've got to wait for a good trade location. Odds are if you bought it right now, you're probably going to be okay for a short-term scalp, 5-minute scalp, 3-minute scalp. You're probably going to be all right. But probably is not good enough when you're playing with leverage. You could easily get wiped out if you don't mind your P's and Q's with your entries. So right there, if you get a pullback down around 60, that's going to be a pretty good area. I think that I would be looking to get involved to the long there. That's how I'd be looking at silver. As far as your next big round number, a lot of people are going to, I don't know if they're going to be, trying to get cute with their big round numbers. So the idea is, okay, well, 60 was a big one, so 61 is going to be a big one too. Not necessarily. Think in terms of quarter handles. That's typically my rule of thumb. When I'm looking for key levels, I'm looking for quarter handles. What's a quarter handle? It's quarters. Think in terms of quarters. So if we go 60, all right, and we're working on a quarter scale, what's the next one? 60, 62.50, 65, 67.50, 70. You're going to find that those areas are the ones that get more compression and more two-way action than just say 61, 62, 63, 64. Remember, all we're looking for is two-way action. That's it. I'm partial to quarter handles. If you want to dig in and try to sell in front of 61, you may be right, you may be wrong. I don't have much confidence in that. That was a great short-term scalp right there from 60 to the short. Let's look at the 4-hour chart here. Great breakout. Something like that would be your 4-hour Fibonacci. Definitely would trade it if we lose a handle on 60. Let's try one other thing. Sort of there's our Australian dollar. So you got a 4-hour chart right there on silver. Price has absolutely exploded way back here. There was your sell. There was your crossover bid. It's not colored in because it's a doji. That's happened a lot if you notice. But right there, boom, there was your bid somewhere down around 51, and now you're up to 60. That's a great trade. What could we be looking at now from a 4-hour chart? A couple conditions I would take if you were going to sell. If you were looking to sell silver, just understand you're fighting just an absolute ripper of an uptrend, an absolute ripper. What this could base out right around 60, and then if you do get that 9 EMA on the 4-hour chart to cross beneath the 20, we could sell that thing and potentially get short. That may not be a bad play, but we're a few days off of that, maybe the rest of the week off. We have to see some prima facie evidence that price is becoming exhausted at 60. One last thing I'm going to point out on this silver chart, and it's a mistake people make with their RSI indicator all the time, and I don't advise ever trading RSI in this fashion. RSI has now broken out on the 4-hour chart, and it's above 70. That is an overbought territory. That means that we want to sell the market. I highly recommend not doing it. Not until we get some confirmation. I would much rather see this area right in here, this 4-hour chart, this 9 cross underneath the 20 EMA in sort of confluence with this 60, and we got a great stop-loss location that would have been priced when it is overbought. That's a trade. That's something we can hang our hat on and get excited about. That is what I'm talking about. Now, as far as the rest of this goes, trying to sell right now naked just because, well, the RSI is an overbought territory, I'm going to take a short. I would advise against that because this trend is strong. This trend is really strong, and if you do fight it, more than likely you're going to lose unless you got some good confirmation, a good stop loss, and a good risk versus reward. Right now, you do not know where to stop yourself out at, and that is a major, 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 major problem. So be careful with that. If you're looking to short silver, be smart. I mean, even if you wanted to do this on a 30-minute chart, I would sort of give you the benefit of the doubt. I'd say, okay, we're deep into overbought territory. If you do get that 9 EMA to cross under the 20 on your 30-minute chart, I probably would give you the benefit of the doubt and say, okay, go get them. Go for it. That's what I would say. That's what I would say. Something to think about there if you're looking at silver. Now, as far as the rest of this stuff goes, I mean, we could pick through the majors. I don't see much here. This was sort of an area we wanted that 153.20 zone in the Japanese yen. We wanted to bid that. There's starting to be real questions now about the direction of the yen because of the BOJ rate hikes. Also, the earthquake yesterday. I didn't see any of the tsunamis really materialize that we talked about, but my news feed, maybe I missed it. I could have missed it. I don't think I did, though. But we definitely are looking at 2025's high, 158.88. I would be very surprised if that doesn't come into play. We do have a trade idea out, I believe, on this, and essentially what it's going to be is something like this. It's going to be a short from this zone, right in front of this zone, and that essentially is what we're going to be looking at, just a nice short trade right in front of the yearly high. The idea is that you're going to get compression there and then potentially break. Something to think about there. All right, natural gas. We'll end with natural gas. This is interesting to me. This is one of those trades or one of those markets that it's difficult to trade. I'm not a gas trader, never claimed to be, but our levels are pretty true. They're pretty true. Really, Russian invasion of the Ukraine, epic highs, really just panic, euphoric times for natural gas bulls. And then we went all the way down to really the bottom of the barrel, down there right around 150, somewhere that 1542. And then you rallied right up there at 47.45 and then pulled back. And then you hit it again, pulled back, and then we broke above that zone. And now we're pulling back, and it's turning into a monthly hammer. that could be the top of our market. Let's wait and see how the rest of this month pans out. But if, in fact, you can't drive any higher than that in December and maybe the first part of January, we start swinging around to spring seasonality in February, mid to late February. You could easily see this market trend down, especially, if you get this Russia-Ukraine peace deal. Not good news there. I mean, there's a lot of Trump was pretty upset today with Zelensky again. Zelensky reaffirms his refusal to cede land to Russia. Basically, Trump came out and said, you haven't had any elections in the Ukraine in a while. You need to have elections before going any further here. Of course, that's just all saber-rattling, trying to get a deal done from the United States' end of it, Trump's end of it. He wants a deal done, so you say, well, I got a peace deal going. It doesn't look like it's going to happen. Let's see. Zelensky says he will send U.S. revised plan to end Ukraine war. I mean, whatever that means. I doubt it means anything. Then you've got all sorts of offensive campaigns. Russia-Ukraine war. Trump says Putin is winning war in attack on Zelensky. So it was sort of a hot news cycle there with the Russia-Ukraine war. If you do see a settlement to that, even a ceasefire, even a prolonged ceasefire with negotiations going into the spring months, you're setting yourself up for a bear market in natural gas. And we've got an incredible area to be short from. So definitely want to keep an eye on that gas market if you're a gas trader. I think it's very, very, very risky. So if you're in that market, you have my blessing. I love the aggressiveness. I love the aggressive nature. Just take care of yourself and take care of your money. Don't mess up, that's for sure. All right, let's see. We got a question from Bobby Bob. WTI. Okay, I'll cover WTI, our interest rates, and then we'll go ahead and call it a day. Gordon Williams, good to see you, Gordon. All right, Fed Watch. Here we go. My throat is still just toasted from Saturday's game in Missoula, Washington Grizzlies Stadium. Great football game. We got another one this week, so I'll be hoarse next Monday and Tuesday as well. All right. Here we go. Fed Watch, CME. I'll have it for you tomorrow. FOMC Live. We'll be here with bells on. Be sure to tune in 10 minutes before the press conference begins. I'll take all your questions, and we'll be sure to do some live scalping. Target rate probabilities for a tomorrow rate cut's 87%. And that's the biggest thing you need to remember about tomorrow's meeting is 87%. We're thinking that the forward guidance is going to be everything. I want to see the Fed's economic projections. I also want to see exactly where the dot plot comes out and how many rate cuts are in store for next year. Just remember, it doesn't mean a lot. It doesn't mean a lot because that FOMC boardroom, the FOMC chairman, is going to be different next year. They're going to get rid of Jay Powell, and they're also going to turn over several members of the FOMC. So this dot plot, these projections probably don't mean a whole heck of a lot, especially when we get into Q1 of next year. Now, as far as what we believe is going to happen with policy, I think it's dovish. I'll definitely tell you exactly why moving forward. But I think that you're going to be looking at rate cuts across the board in 2026, and a lot of that has to do with the members of the Fed. We'll talk more about that tomorrow. It's more appropriate for that talk. But 10 minutes ahead of that release, 2:30 p.m. Eastern, 2:20, we'll be on live, and I'll go ahead. I might come on live earlier than that. I don't know. We'll see to give you some full coverage. But I think it's going to be an interesting meeting. We are expecting a rate cut, and that pretty much is the long and short of it. All right, let's go ahead and get on out to U.S. oil. This would be your WTI market coming off nicely. There's a 4-hour chart, which I don't use at all. Let's go to a daily. Pretty good stuff. We talked about this. I'll go ahead and highlight that top level because we called the top of this thing perfectly. And it just came across the board Friday. And right there it is. So there's your 60.51. There's your top. We went right up there on Friday after the PCE numbers came out, 60.50, 60.50. And now we've got a big reversal of about, $2.30. That's a big deal. Let's go ahead and take it down to a daily, and you'll see that we're off a big again today. So could we see anything to drive this market higher? Venezuela strikes. I'm not going to recap it. I've been doing it every day. We'll see when it happens, but that's the big thing. Rate cuts, we know they're coming. They're already baked into the cake. EIA crude oil inventories tomorrow are going to be interesting. We're sort of on a streak of building supplies here in the United States. If you see another big jump in that 5-year average decrease, you're going to have an opportunity potentially to see even more bearish action in WTI crude. This is interesting stuff. I think we're not beginning to do it. We're doing it. I think we're making a run at our yearly low. I fully expect that to happen. Yearly low, I would be watching that down there about 55.25. That would be a great long side scalp. As far as what I would want to do right now, I'd want to be short. 30-minute chart. What do you want to do? I mean, you see right there's your trend day, sort of when volume began, a little bit before the market opened. Right here is where I'd be starting my Fibonacci's. That's 9 a.m. Eastern, 7 a.m. my time. That's the traditional NYMEX pit open, and that's what you want to do right there. You want to go right from that top spike high right to that spike low. In your late day trade, your late day scalp, right there, 50, 40, 58, 41. You'd be selling those to the short, probably looking. This is an intraday 30-minute scalp based on the U.S. session. You've got your 13 period moving average there. You've got a 38%, plus you're right around 58.50. Probably looking for 10 ticks there. If I was trading futures, I'd be looking for 5 to 8. If you're trading this U.S. oil, and it looks to me like you've got a very tight spread of about 0.01, so about 1 pip. If you were going to do that, you probably should be looking for maybe 8 to 10 pips. But that's about it. That's not a position. You don't take a position from there. You probably shaded a pip, 58.40, 58.39, depending on how aggressive you want to be. But your profit targets are very conservative here. It's an intraday level. It's not as good as dailies, weeklies, or monthlies, but it still can get you in on a hot little scalp, and I think you're in pretty good shape. So the read's down. I have no problem selling this market right now. I just watch that very closely. 1-to-1 risk versus reward, not taking a huge loss, but you probably have an opportunity potentially to grab maybe 5 to 8 ticks on the futures market and maybe about 8 to 10 pips on the U.S. oil market. Something to think about there if you're interested in trading U.S. oil towards the end of the day, WTI. All right, everybody, I'm going to go ahead and sign off. The big thing we have to remember for tomorrow is that it's interest rate day. It's FOMC day. I mean, there's no two ways about it. I think that we're going to be in a position to make a little bit. I haven't decided which strategy that we're going to scalp yet. We'll probably be scalping a 920. That one's really growing on me. But the 9 EMA strategy with RSI confirmation's a good one as well. And also probably some Fibonacci levels on maybe 1-minute charts, things of that nature. See if we can get a breakout, potentially rack a few ticks. And then remember, on Thursday is going to be our Switch Markets live trading webinar series, tick scalping. I'm going to sit down. We're going to pull up. I'm going to have 3 or 4 target markets, and we're going to see if we can scalp 9 ticks or so. No, 10 ticks. We're going to shoot for 10 ticks this week. Last week we got 9 easily. With our last one of these we got 9 ticks easily trading gold. This time I think we're probably going to be looking at gold futures, WTI futures, and probably E-mini S&P 500 futures. And we may be looking at, if there's an overreaction in the dollar Swissy after the RBA, we might try to grab a few pips there as well. All right, everybody, that's a wrap for me today. Thank you, Shane. Thank you, Team Marina. Thank you, everybody, for showing up today. It's always a pleasure. This is sort of a dull time of year. We don't really have the desire from the trading community out there. There's not too many people that are in there that want to learn trading right now in the 12th month of the year. Either most people are tired of trading. A lot of people have lost all their money, or some other people are just taking the holidays off, which is cool. I get it all. You're welcome, Tuku. My pleasure. All right, everybody, thank you for joining me. Trade the action well. We'll see you tomorrow on FOMC Live.